Hello, everyone. Friday was pretty much a clear indication that the market was basically telling us, hey, it's Friday, it's summertime, I ain't going to do much today. And it didn't. Friday, we saw the market bounce a little bit on extremely low volume, razor thin, paper thin volume. It almost felt like it was a market holiday session on Friday. But as you can see, the NASDAQ here, for the week, small gains overall. It wasn't that impressive. Some people think that we might be bottoming here because of this volume surge. Unless the volume surge looks like what I'm seeing back here in October, you see these levels back here. Until I see that here, I don't think so. And our momentum oscillators, as you can see, are nowhere near extreme oversold on TSV or MACD, stochastics or RSI. So it's kind of hard to, think about where it went last time in October, these levels, for instance, and look back here again. We're nowhere near there. Going in the right direction, but with them still heading down, we have to respect that overall the market's trend seems like it still wants to be lower. And as you can see here, also in the S&P 500, nowhere near extreme oversold readings on any of those oscillators. The Russell 2000 was the strongest one on Friday, up 0.66%. Once again, though, even though volume's not on here, it was well below average, paper thin. And the oscillators, well, TSV is getting down there and it's turning up. MACD nowhere near completely being oversold. Stochastics is getting there, but as you can see, it can go a lot lower. And RSI is trying to trend up, but there's no positive divergence. So once again, there's no real reason to think that we should definitely be rallying anytime soon. And on Friday, once again, the utility stocks stood out like XLU and VPU, adding on to their gains. VPU, very, very nice, taking out his 200-day moving average on heavier volume. And overall, the stocks that did show up would be like, Prestige Brands. I think that's a retail beauty product stock. OXM, consumer non-durable, so not a big deal. FAF, an insurance stock. SMM off the lows. Those, you know, oil stocks overall, even though XES was weaker. And while I have that up here, I might make mention that yesterday it was a 50% sell signal with it moving below this day's low day. 2164 is my first sell stop. Final was at 2070. With the confirmation close below the 20-day moving average, I'm moving half the sell stop to today, that day, Friday's low day, 2111. And then I'll keep the other half, of course, obviously at the 2070 lows. So I'm going to go ahead and split it up half and half there. Outside of that, though, personally, I didn't have much to do because the sell signals, EGRX, that is a 100% sell signal. I've already been knocked out of my entire position, but EGRX, third confirmation close below the 50-day moving average, breaking those recent lows from 2 days ago. So EGRX 100% sell. I'm all gone. INSY is actually closing below the lows here of 35.07, but the big intraday reversal prevents it from being a full sell since we still have gains from the original position. I've already, on an end of day basis, I've already been knocked out of everything, but INSY minimum is a 50% sell. And then DRV, I've been knocked out of this thing forever. I've been out of this stock since June, but on an end of day basis, as long as it holds this low right here, which it continues to do, it's still technically a hold, which is 2313. 2322 prevents it being from 100% sell, but it's closing below this recent support level of 2332. So it's another 50% end of day sell signal. Once again, I'm completely out. And then ICCC, speculative long, that immediately worked. It's already been a 50% sell signal once, and once again, closing below the 20-day moving average and heavier volume. I do not have a position at all, so it's irrelevant to me. But no matter what, 851 has to be the absolute final sell stop level if you are still long any of this position in ICCC. So besides that, like I said, it's the standouts continue to be the safety stocks. This week I noticed GD, look at it breaking out on Friday, and Boeing. So the aerospace and defense stocks are getting in there. FAF, the food stocks are starting to go. Post is in my perfect speculator scan. You can see that that's breaking out on heavier volume. Could have been a new long yesterday if it would have closed near its highs, but it looked like it might be even trying to top short term. Nope, another breakout. IMKTA is in my perfect speculator scan. That's a retail grocery store stock. Ooh. So once again, the stocks that are moving are your typical defensive market stocks. Aerospace, even I think it was tobacco. Yep, look at Mo. So you got aerospace, tobacco, insurance, diversified services. Like I think like even, yep, that even counts BCO. This was technically my best potential long position on Friday. Why I am not taking it is because the close is at 30.36. The previous close of the 50-day moving average was 30.39. So minimum, I would have wanted to see BCO close at BCO close at 30.40 to have taken a new long position. Since it did not close at 30.40, I will not try to take a bottom fishing position in this Cansom quality stock. But I do like its technical pattern. It's a diversified services stock. They hold up well in a poor market. So maybe BCO can go sideways here, keep that green BOP growing, consolidate in lower volume, and give me another pocket pivot point signal, and I'll be along BCO. But the bottom line is that, with XLE, XLU, XME, the metals, these are all defensive related industries, and as long as that they are moving higher, it's indicative that we're in a rough market. And like I said with the VIX is still not showing any fear whatsoever. So if you believe a market's going to bottom, let's even go back to that October low. What did VIX get up to then? 31. So in the most recent attempt, our high was 16.28. 1 cent above the previous high, 16.27. We haven't even hit 20, which was the July highs back here on 7.9. So until we at least even hit 20, thinking that we have a tradable bottom is just absurd to me. So 16 isn't going to cut it, and the overall volume on the attempted bottoming session that we had in the NASDAQ on Wednesday isn't going to cut it for me. As long as these defensive industries keep taking the lead, I'm going to go ahead and keep assuming that the market probably wants to head lower because we're in August and September. After August and September, sure, we could easily resume our uptrend and just, for now, the utilities and all the defensive industry stocks are just leading now because the overall market's weak. So, yeah, it could be very short term. However, these are some, these stocks have been in long-term downtrends. And eventually, they're going to find a floor. And a lot of these stocks that look like that, they potentially found a floor. So it's just something to keep in mind that this could be more longer term than shorter term. But I have a completely open mind. I recommend you do too. The market's summertime. We're still extremely range bound. As long as we're in between the July highs and July lows, it makes 0 sense to me to, be hardcore bull or bear here. Russell 2000, not looking good. We're getting a death cross starting to come. We're already under death crosses on the Dow Jones Industrial Average and the Dow Jones Transportation Average. The New York Stock Exchange also. And then the S&P 500, as you can see, we're getting very close there too. So, it's not a good situation, but we could easily resolve it higher after a while. It's summertime, everyone. It's a good time to go on vacation.